Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps that were in play today. So first up, we're going to take a look at ticker symbol AMRH, closed up 92% today. This was a really big move. It had a strong gap up open, but as you can see, the black candle formed today. The open was up here near $2. It ran all the way up here close to 3, and then as you can see, the close was way down here near low of day. So when the black candle forms like this, the safest thing to do is to head to the sidelines. That signals many times the candles will continue working back in the bands. As you can see, today's candle is above that purple line, the upper Bollinger Band at 151. What you want to see is this 50-day simple moving average at 129 hold. That's the key level. It had been big resistance, and so now the key is to turn into support, and then it needs to get above the gold line, the 100-day simple moving average at 188. If it can get above that level and hold the 50-day simple moving average, it could head higher. If it drops below that 50-day simple moving average, the risk is there's a gap between high of day yesterday and low of day today, and it could come down there and fill the gap. It needs to hold that middle Bollinger Band at 107 to keep the uptrend going. Okay, so as you can see here on the 15-minute chart for AMRH, it had the big gap up open, and then they just faded the rally. All right, so when EMA 4 broke here, that was your signal. It's breaking down, and then it got below EMA 13, and then the middle Bollinger Band broke. It just kept breaking support. It retraced all the way down to the 50 simple moving average. That's the key level to hold tomorrow at 152. If it can bounce off that level, then it'll have to get back above the middle Bollinger Band at 206 to get a new uptrend going on the 15-minute chart. If it were to drop below that 152 support level, the risk is it drops down here and tests this key support zone between the 200, 300, and 100-day simple moving averages. It would basically put that dollar level back on deck. Okay, so let's look at NAK. This is a really nice move, closed up 35% today. So this chart was heating up after the big drop. As you can see, there was a gap down here. There's a gap between low of day on this candle and high of day on this candle. And notice the big volume spike on the gap down day. So there was some heavy loading down here. It took a few days to set up, but today it finally broke above the bottom of the gap level. That's this red line here, and above EMA's 4, 8, and 13. So that was a really bullish close above 4 key resistance levels. You want to see it stay above EMA 13 at 59.54, and then the two big levels to break above are the middle Bollinger Band at 665 and the top of the gap level at 70 cents. And so you can see it broke above the middle Bollinger Band temporarily and pulled back. Tomorrow it needs to close above both those levels. So above 70 could signal more upside potential, and then we'd be looking at possible run with the 50-day simple moving average. If it fails to break this 66 to 70 resistance zone, it could signal a temporary top. Notice the gap is almost filled here. When 70 gets hit, it's a gap fill, and many times it's a climax event. So it's going to need to get it back above that middle Bollinger Band to get an uptrend going, or else this will be the top of the bounce. Notice here there was a PSAR bull flip. The dots are below the candles. You have a bull cross on MACD and a big volume spike today. If you look at the 15-minute NAC chart, you can see NAK chart. You can see the Bollinger Bands were super tight yesterday. When they get really tight like that, that signals a move is imminent. You can see today they broke out higher, and so that was a nice move. It closed yesterday above the 50 and 100-day simple move, or 100 simple moving averages and the middle Bollinger Band, so it was above the green, gold, and dotted purple lines yesterday at the close, or headed into the close. It closed just below that middle Bollinger Band. But today the key is it was just riding EMA 4 support the entire day, all the way into the close. Notice it stayed above the pink line. It got above the 200 and the 300 simple moving averages, and now it's just pushing higher. If you see it drop below 643, if it breaks this EMA 4 and pulls back, what you want to see is this middle Bollinger Band and 300 simple moving average hold, this 57.5 support level. As long as it holds, there'll be more upside potential. If it were to drop below, that would signal downside risk. Let's look at CHKE, closed up 34% today. Nice move. It got above the 100-day simple moving average temporarily at 126 and then pulled back. It did close above the 50-day simple moving average at $1. That's the key level to stay above. It needs to stay above that level. If it were to drop below, that would signal consolidation and a risk to hold. It's only a good play if it stays above $1 now. And then what you want to see is a break above this 100-day simple moving average at 126. If it can close above that level, that's going to signal it wants to head higher. Notice the big volume spike today. So we'll see if it can follow through. Check out CODX, closed up 19% today. It had the big gap up open, well above the upper Bollinger Band. The upper Bollinger Band's down here at 474. Notice the black candle once again. The open is right here, and the close was actually at low of day. Look at that low of day close. I mean, there's no lower wick on today's candle. Look at that. That's extreme bearishness. I mean, last, yeah. I mean, that's just not a good. That's not what you want to see. Look at the low of day over here is the same as the last trade of day. Okay, so we talk about a white Marabuzo candle. Well, having no candlestick on the bottom, that's just a signal the bears were really strong into the close here. There's a chance the candles will work back into the bands. There's a gap between high of day yesterday and low of day today. So a drop down to that 80 level would fill the gap. What you want to see, notice the pink line's been holding during this whole run. You want to see that level continue holding, currently at 448. As long as it holds, this thing could dip and still have a strong bullish chart. Now, if it were to drop below 448, you could see that 200-day simple moving average at 368 tested. It really needs to hold that level. If it were to drop below that, the chart would be busted. Notice that the green volume bars have been followed by red volume bars. If that pattern continues, there'll likely be a red one tomorrow. If you look at the CODX weekly chart, this shows what's going on. It came up and it hit this key resistance level between September and October here of 2017. The closing price here is the all-time high close back here in September. It broke that level intraday just above 620 and pulled back. It's going to need to close above that level, and that'll signal that it wants to break out higher. I mean, this hit close to all-time high levels. The all-time high is right up here. This is the complete history of the trading of this stock. So you can see just above 680 is the all-time high. It got close to that level, pulled back. It's hitting resistance here from 2017. It needs to break above 540, and then that 620 zone is the really big level. Nice, 2-week run here. This week's candle is forming above the upper Bollinger Band, which is down here at 428. If it were to fail to break resistance here and the candles work back in the bands, you want to see EMA4 at 389 hold. Keep in mind this is a weekly chart, and this week's candle will not set until the closing bell on Friday, so a lot can change between now and then. Okay, take a look at UAMY. All right, so this caught my eye yesterday. Sorry I didn't alert it. It was such low volume, and we had so many plays going on. I just felt like I was going to hold back on this one because it did fail to close above that blue line. Check out the blue line here. That's the 300-day simple moving average, currently at 32. Notice yesterday's volume. I mean, it had less than 200,000 shares traded yesterday. It's a thinly traded stock. It was heating up. And then so I was looking for a break above that level. Today it did break above on a volume spike. It is pushing well above that upper Bollinger Band. What you want to see is EMA4 at 36 hold. You want to see this red line hold here, this 34 support zone. That was the high close from back here in January. And you want to see it stay above the 300-day simple moving average at 32. If these levels can turn into support, it could push higher. If you look here at the weekly chart for UAMY, and keep in mind this is a gold mining stock, you can see here it's busting above the 100-week moving average this week. That's currently at 34, so that's the key level to close above and turn into support. The next key level to break is the 200-week moving average at 48. Notice how that's lined up with the high close for 2017, and then just above that is the high close from 2016. So these are really big resistance levels. We're talking about multi-month, multi-year resistance levels. Now look at the descending resistance line here. You can see it's lined up with the current level that the share price is hitting, and so it's no wonder that it's finding resistance here. It's also hitting descending resistance. Notice how you have this descending triangle type pattern, where you have the support and then resistance. It's close to that. Yeah, so basically, I mean, you could draw another line here. I don't want to get too crazy with all this, but you can see you've got the channel. All right, so it has this channel going on the weekly chart, and yeah, so what it needs to do, it needs to break above the top of that channel, and then that would be the signal that it wants to head higher. That would be the big big indicator. If it could get above this 45 level and then and get above that 200-week moving average for the week, that should be a big clue that it wants to push higher. It will have to break this 2016 high close. So keep an eye on it. It's heating pushing up. You can see back here in 2016 it had some good volume. Now that it's pushing higher, maybe the volume will pick up. Okay, check out SDT. Okay, this had a big move today, closed up 36%. As you can see here, it's been in a very strong uptrend. That's why I recommend to people, especially new traders, stocks that are already in an uptrend on the daily chart. It's much if you're trading long. I mean, the trend is your friend. Notice how it keeps holding the middle Bollinger Band, holding support on the pullbacks. It's been holding EMA 13, and then it keeps making new high closes, and that's the whole key. You get a horizontal resistance here. Horizontal resistance, you get horizontal resistance, and then when you get the break above that's your signal that, okay, yeah, it wants to head higher. So when you got the break above this line, it finally wanted to head higher. I could have drew that a little bit higher, or made that trend line a little higher. Let's see, we could do it like this. You can go like this here, and then you could see how this candle, so you had this this consolidation zone, and then when it finally closed above the high close on these candles, then it finally wanted to push higher. And so we got up to this next resistance level, and you could see it was lined up here at 120. Look at how these upper wicks are hitting that level, failing and failing and failing to close above, and then today it finally closed above. So it's Elliott waving higher. You do have the multiple waves here, 1, 2, 3, 4, 5. Yeah, I mean it's pushing hard here. It depends on how you want to draw your waves, but this could be a climax type of spike, but we'll see. What really is important now is that if it pulls back, that it stays above the 120 level, and you want to see it continue holding EMA 4 at 133. I mean, this is a really big volume spike. It was a big volume push. There's not a super long upper wick, so it closed pretty strong there, and you have the bullish crossovers on MACD on both time frames, and you have a PSAR bull flip. It broke above key resistance. You do have RSI at 84, so it's frothy. As you can see, this is the same level on RSI where it's topped out before. You can see on that last run here when it hit resistance, this is around the same level. Fasto's got some room to run until the last, it got up into the high 90s before. But yeah, it's probably going to take a breather sometime soon here. It's a good looking uptrend. So if you can catch it on a pullback, that would be the best way to play than be a chaser. What you want to see now, this is the weekly chart for SDT. You can see this is the 200-week moving average. You want to see that level hold. If it pulls back and holds that level, that should signal that it wants to head higher. If it were to close below the 200-week moving average after trading above intraweek, that would be a red flag. Notice the upper Bollinger Band and EMA 4 are way down here in 130. That's the the candles could work back into the bands. You want to see this kind of action if you're a bull. Close above the upper Bollinger Band and then keep walking it higher. You could get this kind of action where you get the close well above and the red candle works back in. It's just going to all be about staying above 150 now. That's the big level. Notice how this was the biggest volume week too in a long time, since back here in 2015 is the last time it had this kind of volume. So that's huge. And when it had that volume, they were red volume bars and it was heading lower. You've got this green momentum. This is a multi-month run right now. So we'll see if it's going to climax here or if it's going to keep pushing higher. If it did push higher, you're looking for it heading back up to that 300-week moving average up here at 247. Notice how that's lined up with the high close from 2016. Okay, check out SNES, closed up 35% today. Yeah, this has another good uptrend. It got above the upper Bollinger Band, like I was talking about there, and the candles worked back in the bands. But notice they held the pink line. There hasn't been a close below EMA 4 since this giant flagpole, and so it pretty much formed this pennant flag type pattern off of here, and it's busting out higher. It broke above high close resistance. There's a gap over here, and so what it did is it's turned the top of the gap level into support. That's always really key. The top of a gap is always a big resistance level. It also broke out today above high close resistance. The bottom of a black candle is the close, and so it was the bottom of this candle with the long wick was the key level to break today. It closed above. That signals more upside potential. It's now hitting some resistance from over here. You can see there's a lot of trading in the zone back here in September and October, a little bit in November, and so if it can bust through this 190 zone, you're looking for it to work its way back up to that 300-day simple moving average at 272. 62. Notice how that's lined up with that highs from back there in October and November. It's got really good volume. I mean, it had huge volume on that first push, and it's held support, and they're pushing it higher on another volume spike. So far, it looks like, there's a lot of people still holding. They're loading for potentially higher levels. Okay, let's look at BIOC. Closed up 9% today. Yeah, this is RSI is at 60, so this has a lot of room to run until overbought levels. This is getting going. Notice it just gotten above 50 on RSI, and it's just got above 80 on Fasto. Check out how plus DI is above minus DI and ADX, the red and black lines, but it's not spiking hard yet. This is a chart that's more just setting up, and for us, a good setup is a close above the 50-day simple moving average. That's the green line. Notice how you have to go off this chart months ago to find the last close above that level. So today, the quiet close above 23 is signaling more upside potential. If it can stay above 23, we'll be looking for a run up to the 100-day simple moving average at 31. This is one that I would really keep my eye on, because this, if it can stay above 23, this is a good setup. You're getting in before it breaks out higher. If it stays above, if it drops below 23, it could keep consolidating, and then you could get that middle Bollinger Band retested. It has to stay above 20 to keep this new uptrend going. Okay, let's look at ANY. Closed up almost 8% today. This is another one that's setting up. So I just showed you how BIOC closed above the green line, and that's what we really like. The ANY is trying to close above the green line. Notice how all these candles, once again, you have to go off this chart months and months ago to find the last close above the green line. It's been testing it. You can see here there's a gap on the chart as well. The bottom of this candle is the top of the gap. The top of this candle is the bottom of the gap. It's been hitting the bottom of the gap level and failing to break. Now it's lined up with the 100-day or 50-day simple moving average at 61. So what we're looking for is a close above that level and the bottom of the gap level to signal that it finally wants to head higher. After 3 days of pulling back, it's bouncing off the middle Bollinger Band. Notice how this dotted purple line has been holding. That's also the 20-day simple moving average. That's our clue that a new uptrend is starting. They're not the computer algorithmic trading programs are not allowing the share price to drop below that level. That's the support level. That's the load level. Right now they're loading off of it. That program could change at any time, and if it does, you will know that it's going to pull back further if they let it close below 46. As long as that level's holding, it's in this consolidation period between zone between 46 and like 65 here. If it can close above that 65 resistance zone, get above that bottom of the gap, then that's going to be the clue that it finally wants to head higher. This is another one that I would have on the radar. Set your alert for 61 or even 62 cents, and then so if it breaks 61 and hits 62, then you'll know, okay, yeah, this thing could be in play and possibly head higher. Okay, look at NFEC. It closed up 17% today, so this is another one of those breakouts above high close horizontal resistance. You've got the high close here from a couple of weeks ago here, and so back here on the 26th of May, and so today's close above that level is signaling more upside potential. The top of this wick will be the next key level to break on the daily chart up here around 370. What you want to see now is you want to see this $3 level turn into support and stay above that level. It has a very nice uptrend going. This is why I like playing bounces for stocks that are already in an uptrend. You have a better chance of the stock continuing to head higher. Like I said before, the trend is your friend. You can trade while the stock is heading higher, and what's happening here is it ran up, and then the load zone was off the middle Bollinger Band. Notice how when it hits the middle Bollinger Band, it bounces off of. That's the bottom of the bullish upper Bollinger Band channel. The upper Bollinger Band is the top of the channel. So you try to load on pullbacks off the bottom, and then when it gets ahead of itself above the upper Bollinger Band, that's where you lock in some gains. And so you're just trying to play it back and forth on the way up. I mean, that's one strategy. And so look at NFEC weekly chart. So you can see it's retraced back to this crucial level from 2014. This is what is it looking like here? August, September to the August high close here. The top of this white candle, it's hitting that level right now at 320, and so that's the huge level. If it could close above 320 for the week, that should be our clue, our signal that it wants to head higher. And then you have this 350 zone, which was the open from back here in September of 2014. And so if we can get above both those levels, then you're looking for a run back up into the fours. So this is crucial. This did what we call filled the jar. So you have a jar from the high close back there in 2014, and it retraced all the way down, found support, it formed almost this W type of reversal pattern, and then now the jar is filled. It's filled all the way back up to that level from 2014. And so when that happens, it could either, hit resistance and go sideways, it could hit resistance and pull back, or it could close above resistance and then head higher. And so this is a crucial level on the charts. It has to break 320 and turn it into support to head higher. Okay, look at IBIO, closed up 10% today. So keep an eye on it for a break above 50 on RSI. That would be our clue that it's heating up. It hasn't been above 50 since back here when support broke. Back the last time it was above 50 is when it was actually in an uptrend on the daily chart, and so that would be your a clue that the chart is starting to turn bullish. Fasto's heating up with Fasto above 50 now. Look at the bull cross on ADX. You have plus DI crossing minus DI and ADX to the upside, so that's a bull signal. You want to see that green line stay above the black and red lines. It was looking better earlier in the day when it got to this 50-day simple moving average and was above temporarily. That's the big level to break at 17.1. If it can close above that level, that should be the signal it wants to head higher. It was a good close above the middle Bollinger Band. I'll grant it that. That was the first close above that level since this white candle back here. This black candle closed just below. It tried to turn this level into support in May and failed, and now it's back above. Maybe June will do the trick. Once this middle Bollinger Band holds at 15, then a new uptrend can begin. If it dropped below, that's going to signal downside risk. So keep an eye on it for a break above 17. And then finally take a look at GERN. Alerted this one last night. It did bounce today. It didn't get much of a bounce. It looked like it was bouncing a little better earlier in the day. It did hold the middle Bollinger Band currently at 393. It needs to stay above that level. Notice the last two closes were above that level. It's trying to get a bullish reversal pattern going that it did not form today. The open was below yesterday's close. The candle did not form. They kept us in a super tight trading range. So this is, it looks like it wants to heat up. It looks like it wants to get a bounce going, but it's going to have to break resistance. It's all about EMA 8 at 410, that lime line. That's the top moving average above. Once you see it trading above 410, that should be our clue that, okay, yeah, they are bouncing this and they want to take it higher. Now, if it drops below 393, that's going to be our red flag. If it closes below that level, that's going to signal downside risk, and it could come all the way down here to 329 and test that 100-day simple moving average. So if you're trying to play the bounce here, you have to be very careful. If the 390s fail to hold, you could see a big drop to 329. That's lined up with that double bottom bounce level, the level that it bounced off of before. And so, it's trying to get a new uptrend going after this double bottom bounce. It's just all about holding the green line and the dotted purple line, which is the 20 and 50-day simple moving averages. Okay, thank you for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the link below the video. Thank you.